You're listening to AI Prism from Seoul Economic Daily.
Korea's startup funding landscape sent three different signals this week. Hana Bank just unlocked 200 billion won in guaranteed loans for young founders. Meanwhile, this year's new IPO class is getting crushed, down 25% on average. And Korea's Fabless chip leaders say government demand, not more R&D grants, is what's actually missing. It's Monday, August 24th. Let's look at what this means for startups and entrepreneurs in Korea. Hana Bank signed a joint guarantee program with Korea Credit Guarantee Fund and Korea Technology Finance Corporation for entrepreneurs under 39. At the same time, Korea's third quarter IPO market turned sharply colder after a blowout second quarter. And the head of the Korea Fabless Industry Association argues that public procurement, not subsidies alone, is the missing piece for scaling chip startups. Here's what the numbers show. Hana Bank's new Y-Bridge program guarantees up to 300 million won per company at 100% guarantee coverage and a fixed 0.3% guarantee fee that Hana Bank absorbs entirely, effective immediately for founders under 39. 8 companies listed on Kospi and Kosdaq since July are trading 25% below their offer prices on average, worse than the 19% and 13% declines in the Kospi and Kosdaq themselves. HLB Genomics fell 57% from its offer price, the steepest drop among the 8 new listings. New duplicate listing rules finalized last month now require parent companies to secure shareholder consent under a 3% rule before spinning off and separately listing subsidiaries, adding friction to future IPO plans. Kim Kyung-ho, head of the Korea Fabless Industry Association, called for public data centers and defense programs to prioritize Korean-designed chips over R&D grants alone. Beauty tech startup Witten Company built its own ingredient-driven skincare line and reached over 60,000 self-generated reviews without paid marketing. And it's now expanding into Japanese retail, such as at Cosme. So what does this mean for startups and entrepreneurs in Korea? Earlier, we said fresh capital just landed for young founders. Here's what that actually means for you. If you're under 39 and building a company, the Y-Bridge guarantee removes much of the collateral burden banks usually demand. The cooling IPO market means exit timelines are stretching, so founders eyeing a public listing should plan for a longer runway and tougher pricing. And the Fabless funding debate signals where government money may flow next, toward companies that can already show a public sector buyer, not just a strong lab result. That's today's AI Prism. Founders. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a Won IFRA award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.